U.S. retail sales have come in well above expectations with significant implications for Forex and share trading. The U.S. retail sales report, people had fairly low expectations. March had shown a 0.3% decline. The street was expecting a 0.8% increase, but even that people were a little bit iffy on, considering that we had some weak earnings reports coming out of U.S. department stores like Macys and Nordstrom. However, the U.S. retail sales were absolutely smoking. 1.3% growth, a huge number, showing that the U.S. consumer is coming back in, and and the consumer spending side of the economy, a big chunk of the U.S. economy, is holding up. How has the street taken this? They've taken this as being indicative that the Fed could start raising interest rates perhaps as soon as June. And I'll show it here in the US dollar index. Look at this major breakout today. Big downtrend as weak soft economic data had been coming in, the prospects of a US rate hike getting pushed off. Look at this. Boom. Major breakout out of this downtrend. Confirmation down here. RSI breaking out over 50. Significant upturn underway in the US dollar on this news. What does it suggest? It means that a strengthening economy and rising inflation suggests that the Fed could raise interest rates as soon as June, and that would keep them on track for 2 hikes this year, potentially one in June or July, one in December, with the September and October less likely because of the U.S. election. This also has had a significant impact on trading in the stocks of U.S. retailers today, and I'm going to go through a few of these just to show what's been happening here. Macy's was one of the first stocks that reported earnings. They missed on earnings, negative guidance, kaboom, we see the stock getting hit here. Currently basing out now today is starting to work its way back up. Nordstrom, which was one that had missed overnight, missed on earnings, missed on sales, cut guidance, negative same-store sales, kaboom on the opening. But look at this very quietly. Since then, the shares have been quietly working their way back up. Yes, they're still down a lot to be expected, but they're kind of up off their lows a little bit here. Moving into next week, the question is going to be, is this weakness confined to department stores? And if the retail sales are up so much, where are people spending their money? So one place we'll start off with is Home Depot. Home Depot reports on Tuesday the 17th, and their stock has been holding up reasonably well. As we can see here, we look at the trend. It's trading pretty close to its highs. It's above its 50 and 200-day moving averages. Expectations are pretty good, but be careful. We're seeing that this downtrend in the RSI tells me upward momentum is slowing. So if we did see Home Depot miss, it could be vulnerable here. Recently trading near 134, 200-day moving average near 125. On Wednesday, we get L Brands, Lowe's, and Staples. Thursday, we get Wal-Mart and Gap. So it's a busy week for earnings, and there's a number of other companies reporting as well. I'll just find out Wal-Mart here as another example. Wal-Mart is one that had been hit hard in the latter part of 2015. It's been recovering. Its shares had already started to roll over in the last few days after the Macys Nordstrom debacles. So we have seen those pull down the department stores. We'll see which areas people are actually spending money on, because we could start to see some divergences as the week progresses.